Hey, Dan Fitzpatrick here on February 28th. February's done. Now we're looking to March. I've been starting with Groupon here. I'm laughing at myself, which I do a lot because there's a lot of grist for the mill on that thing. But I featured Groupon yesterday after the close. Didn't know that they'd already announced earnings and that ultimately their CEO would get fired. And my sense was, hey, I think these guys are moving higher. Seriously, my bad. I didn't even know they were announcing earnings. So that was like sloppy research on my part because it basically wasn't any research. And so I got to apologize for even walking you through this. Happily, unless you were in a cave or something, you probably didn't buy this morning because of what happened. My sense was, again, I think the stock's headed higher. Instead, it's headed, it fell and headed lower. One of our members, and by the way, whoever you are, I forget, I've been reading so many forum posts today, told me not to feel so bad about myself because it gave him a good 59-minute trade. And what a 59-minute trade is, by the way, is literally a trade for the first, first 59 minutes of the market. And so what happened here with Groupon was the thing gapped down, fell down, and the low of the day was 1 penny below where the stock actually opened. So this was actually a nice trade to the long side for those of you who are nimble day traders. However, make no mistake about it, I'm not taking credit for that because, again, I did some really crappy research and didn't even know that they were announcing earnings. So my bad. And actually, this is the second time that I've done that recently. So, I hate to admit it, but, I am, if nothing else, honest. Another one that I did recently this last week was Priceline. Same thing. I did not look at earnings. By the way, please don't do that. And I opened up a bull put spread on Priceline about 10 minutes, less than 5 minutes actually, before the market closed on the day that they announced earnings after the bell. It was a bull put spread, and the reason for my opening it was, hey, this is bouncing off the 50-day moving average. I got a sense of where it's going to close. March, March options are going to expire in like 16 days. There's a couple more days, earlier. And so I took this purely as a technical trade. And then so after the end, after the market closed, an hour or so passes and I'm going through my stuff. As I go through my stuff to get ready for my strategy session, I look and I see Priceline trading up here northwards of 700, 705 or something, 705. And I'm going like, what the heck just happened? And so then I kind of had a sense of what was going on because stocks don't move like this for no reason. And then I realized earnings were released. They were really good. The stock went up. And so this is, in my view, like blood money. Like I don't deserve this money, but I'm going to take it. It was a stupid trade that I made, but I'll take the money. What I also did, though, was, is started, and I believe I mentioned this on optionmarketmentor.com, opened up a bear call spread because the stock gapped up so much and it didn't keep going. So now basically I've got this thing sandwiched as long as the stock closes basically above this level and below this level 2 weeks from tomorrow, then I'm making a lot of money. But half of it here is just stupid money. It's dumb money. So don't make that excuse. Don't make that mistake. Now, with that said, look at Chipotle. It was basically flat on the day. And before I turned on the record button here, I actually did check earnings. Who would have thunk it? And they announced earnings on February 8th, or maybe it was February 5th actually. So we don't have to worry about that. What I'm looking at here is a stock that continues in a pretty nice uptrend here. Had the big dumpage there, but it's in a really nice uptrend. Volatility's squeezing a bit. So I would look for more upside from here. I'm not saying that it's going to happen tomorrow, but just watch this stock. If it pulls back a little bit closer to the 50-day moving average, that would be the ideal time to own it. That would be the ideal time to take an entry. But just zoom out and you can see what's happening with the stock. It is gradually trending higher. It's kind of pulled back to support, drifting up again. I think on a strong market day, you're probably going to see this stock move nicely. It's going to push above the 200-day moving average. But here's the deal. Even if it doesn't do that, respect the trend. Respect the uptrend. The uptrend is intact. So just go with it. Okay, members, get over to the strategy session. Again, guys, sorry for Groupon. Total my bad. But I think Chipotle is going to work a little bit better.